This is Brian Carlton for ABN Newswire. I'm back at the Bowlers Club of New South Wales for the August Symposium Resources Roadshow, where ASX listed companies get a chance to present their wares to potential investors in a nice, relaxed and informal environment. Recently listed Perth-based gold exploration and project development company Renaissance Minerals Limited, ASX code RNS, was one of the presenting companies today. It has projects in Western Australia and Alaska. We're going to focus on WA more so today and see some near-term cash flow on the way, which is always good news. Renaissance Minerals Managing Director Justin Tremain joins me now. Hi Justin, welcome to ABN Newswire.
Thank you.
Now let's go back to your IPO mid-June this year. Oversubscribed, raised $7 million. Where did that early market confidence come from?
Look, we were associated with Griffin Minerals, which has been a very successful company focused in West Africa and have a number of supporters behind it. But we attracted, quite surprisingly for a company of our size, some very significant institutional shareholders to our register. And as a result, we were originally looking to raise $5 million and we had to increase our offer to $7 million to accommodate those types of investors onto our register.
Now, you're operating in some very high quality gold country, aren't you?
That's right. I mean, our two key projects in Western Australia, the first one is in the Southern Cross Greenstone Belt. I mean, that belt has produced over 12 million ounces of gold historically. It's a world-class belt. And our other project out in the Eastern Goldfields, east of Kalgoorlie, I mean, that really is the gold capital of Australia.
Indeed. Now let's talk your flagship project, the Radio Gold Mine. Where's that at now? Where are you at with it?
Well, the Radio Gold Mine, the history of the Radio Gold Mine is it was in production up until 1974 and it produced over 70,000 ounces of gold at a very impressive grade of 38.5 grams per tonne.
What did it stop?
Well, it was operated by a private family, and back in 1974, the gold price was only $100 an ounce versus the current price of $1,400 an ounce. And they did mine it to 100 metres deep, which is very shallow for underground mine of today's standards. But back in 1974, a private family mining something 100 metres deep was, quite deep.
So why wasn't radio redeveloped between 1974 and 2010?
Yeah, well, a couple of reasons. One, obviously the gold price was never as good as what it is today at $1,400 an ounce. And secondly, during the 1980s and 1990s, most Australian gold companies were looking for substantial open pittable deposits, and many high-grade underground mines such as Radio are often overlooked. And what we've seen recently, particularly with Silver Lake Resources with their Daisy Milano mine, they've demonstrated how profitable and the value that these types of mines can create for shareholders. So coupled with the gold price now near record highs, we think now is the perfect time for the Radio redevelopment.
Now that Radio project is your main vehicle for generating cash flow, isn't it?
That's right. Our strategy is about bringing Radio back into production in the near term and generating cash flow from that, and using that cash flow then to go and fund our programs on our very prospective exploration packages.
Mount Rankin, let's talk about that. You've announced a new discovery there just a couple of months ago after one drill hole. Now that must be exciting for you.
Yeah, no, it was a nice surprise. Mount Rankin is one of our walk-up drill targets within the Southern Cross Belt, and the first hole we drilled came back with a broad 30-metre zone indicating that it might have some size to it, and within that 30 metres there was a couple of higher-grade zones within it. And so we've got a rig on site at the moment drilling a couple of follow-up holes to that first hole.
You must be fairly confident there's a good deal more there.
Oh look, it's associated with a structure that runs through our project area and up to the north and hosts a number of the gold deposits in the Southern Cross region, and there's no better place to find gold.
The Eastern Goldfields, can you talk me through that?
Yeah, our Eastern Goldfields is, we've accumulated a package of over 3,000 square kilometres, and it's pretty much situated between Saracen Minerals' Carosue Dam operation, where they've just recommenced production, and Integra's new Randall's gold project. And it's on the same geology that hosts a number of the gold deposits up to the north around Laverton and Leonora. And we feel it's being severely underexplored relative to that ground, the same gold-bearing rocks to the north that have yielded these very significant deposits. And the reason for it is that it's historically had a very fragmented ownership structure, and this is the first time it's been put into one vehicle, which will allow us to undertake a systematic exploration program.
Obviously there's been some technological developments in terms of discovering and getting it out of the ground in the past couple of decades particularly. What sort of technologies are you utilising?
Look, I mean, in the past, people were looking for deposits which were outcropping at surface. Now, there is some shallow cover over our area, and as a result, it hasn't attracted the same exploration. And that means that we just have to do some shallow air core drilling over that area. And there's also some, advancements in some geochemistry that we can use, which wasn't available to previous explorers.
Now you've got some very heavy financial hitters on your team, if I can use that term, yourself included. Getting the financing is fundamentally important to the success of any project, isn't it?
Yeah, I feel as though our management team has the combined skills necessary to take a company through from an exploration phase through to development and production. We have the combined financial skills, people who are experienced in actually funding the development of mines, and at the same time we also have the geologists who are very experienced on the exploration front and are experienced in delineating these deposits.
Your market cap at the moment is about 11 million?
That's right, yeah. We fluctuate sort of between 11 and about $13 million.
And you got 6 million in the bank-ish?
Yep, that's right.
Right, so obviously you'll be looking at some sort of strategic partnerships once the reserves are proven and you move into that production phase.
Yeah, we're very fortunate. I mean, we're not looking to build a processing plant at Radio. We'd be looking at treating the ore elsewhere. So the capital expenditure required to bring Radio back into production is very modest. We're looking at about $3 million to commence a trial mining campaign, and from there, the mine should be pretty much self-funding.
Still on Radio, why do you think you're going to get into production so much faster than some of your competitors, perhaps?
Well, we've got the benefit that we've got the production. It was previously in production, so we have the benefit of all the underground mining infrastructure in place there today, which includes a vertical shaft. So our strategy is, rather than, due to the mineralisation, it's quite nuggety, which would mean it would be quite expensive for us to drill out a JORC compliant resource. Yep. Our strategy is all about dewatering the existing workings. Okay. Bearing in mind, we know that it's produced at 38 grams per tonne in the past. So we dewater the workings, refurbish the shaft, and actually commence mining the ore body and demonstrate that the historical grades of 38 grams per tonne or in that vicinity can continue to be produced.
And you'll be continuing exploring at the same time?
Absolutely. I mean, we've got a very big package both within Southern Cross and Eastern Goldfields, so we'll be running in parallel to our Radio redevelopment work, we'll be running very aggressive exploration programs.
Do you think the gold price will stay at those record highs, get higher? Is it going to drop back a bit? What's your projection?
Oh, look, I'm very confident on the gold price. On the downside, I don't think the gold price can go much lower. The cost of production is around sort of $800 to $900 an ounce, and I think that underpins the gold price. Central banks now are net buyers of gold, and of course you've got the sovereign debt issues coming out of Europe, which all bodes well for the gold price.
My standard question, infrastructure, particularly transport.
Yeah, look, we're only about 30 kilometres north of the Southern Cross township. Southern Cross is a significant town in Western Australia, and we're only 30 kilometres off the main highway that runs from Perth to Kalgoorlie. There's a railway facility that runs from Southern Cross to Perth, so the infrastructure in Southern Cross is exceptional. I mean, it is a historical gold mining town.
What was your major pitch to potential investors today while you were presenting? What was the key story you wanted to tell? Well,
look, I think what sets us apart from many other explorers is that we do have the real opportunity to be in production in the very short term. And rather than going back to shareholders to raise money down the track and diluting shareholders, we'll have a project which will be generating cash flow for us, which we can then use to fund our exploration programs and keep our capital structure very tight.
Do you find these sort of symposium events useful?
Yeah, they're very good to touch the investors and build the profile of the company, particularly only being listed 2 months ago. It's a real opportunity for us to get out there in front of some new investors.
It's been a spectacular success story.
It has, and I think there's plenty more to come.
Justin Tremain, Renaissance Minerals Limited Managing Director. Thanks so much for your time.
Thanks, Brian.
This is Brian Carlton for ABN Newswire.